One of the biggest shocks to the world this year has been when US President Trump announced his Liberation Day tariffs on all of America's trading partners on 2nd April, causing global stock markets to plunge. However, most markets have since regained their composure after the reciprocal tariffs were paused, with many investors now assuming the worst of the tariffs will be watered down in the face of unfeasible economics should such tariffs take effect. That said, investors need to prepare for the change in geopolitics and trade dynamics and the impact on financial markets. Amidst the uncertainty of this change in macro environment, Japanese corporates have been making gradual changes on their own, but these changes are for the better. The Japanese stock market for many years had been a highly volatile market, due mainly to the volatility of corporate earnings as well as the fluctuations in the currency, which at many times had a strong correlation. In times of uncertainty, many companies chose to preserve capital at the expense of shareholders, typically reducing shareholder payouts or even raising capital at the expense of share prices. However, with the push by the Tokyo Stock Exchange for companies to deliver better capital efficiency and corporate value, many investors have joined in the engagement for better corporate governance and shareholder payouts. And this activism has now taken on a life of its own. Corporate managers have slowly but steadily responded with improved corporate governance and enhanced shareholder payouts. One of the key outcomes of this change in mindset has been companies making stable and rising shareholder returns as one of the key priorities, with many companies setting minimum dividends and hiking dividends annually as a target, regardless of earnings outlooks. Another outcome is companies are now disposing of their idle and non-core assets, such as idle land and cross-shareholdings, and using the proceeds to invest for growth or to return to shareholders. With the ongoing structural changes in the shareholder payouts, the Japanese stock market is no longer an earnings-driven market, but a returns-driven market. This augurs well for better risk-return dynamics and makes the market more attractive for investors looking for a safe harbor in an increasingly unstable environment.